So have you ever been in the position where you've taken a trade, following trend, and then found out that the breaker structure was actually a liquidity grab? In this video, we are going to go over a way we can find out whether it was a liquidity grab or a breaker structure using something known as divergence. This will help us better avoid false market structure and help us better understand what price is actually doing. This is how it works. So what we're going to do is we are going to go over a drawing example first, and then we will go over an example with live price action. So essentially what we want to do is we'll have two pairs up on the screen, and so we're going to be using this over here. We're going to click on this one, then we're going to have two pairs on, and as you can see I have Euro USD and GBP USD as well. Now what you need to understand is when you do this is that we want to have pairs with either the same base pair, which in this case is US dollar and US dollar, or the same leading pair, where obviously in this case is not the same, where you got Euro and you got British pound. So let's go back to the normal one and let's go through this example. So what we want to see is this. So let's say that this market structure here is Euro USD, and then we have this market structure over here, which I'm going to make as similar as I possibly can, is GBP USD. So this is Euro USD, and over here we have GBP USD. Now the problem here is, right, as we can clearly see, is that price here is moving down, and then we get this breaker structure over here, whereas on GU that breaker structure doesn't happen. Price is still stuck between this leg and this leg, and it's moving like almost sideways. And so the reason why we call this a divergence, okay, and this is what a divergence is because this low over here on GU hasn't been broken yet. And so at this point here we have Euro USD that is saying, oh, let's sell from this area here, but GBP USD over here is not in a sell position. It's not telling us, and it's not giving us the confidence to take a sell. So essentially what we basically look for is for Euro USD to be in a sell as well, or to give us an indication of a sell like it is, and we want GBP USD to do the same thing. So essentially we want GBP USD to do this as well. And once they're both lined up like so, as we can see in this example here, they're both telling us that we have a sell opportunity, and that's the only time we want to take a sell. And obviously the same is true for the buy side as well. So we want to see something like this. So we'll only take a buy if both of them have broken structure and given us a good indication that they're both looking for buys. And essentially that's all that divergence is, and it's just telling us, and that's just us using two different pairs to give us a good example. So now let's look at a live example on both the pairs. The sponsor for today's video is Trader Edge. As you know, I've been using them for a while now, and they are great journaling and backtesting software that you can use to enhance your trading. So as a quick overview, this is the dashboard that you come to on the homepage. You have a backtester where you can backtest your trades and then take a screenshot, and you get all the key metrics you need on this side here as well. And I think the best thing I like about it is the fact that you can just journal your trades here. So if I show you November's, so as you can see, 4 wins, 3 losses, profitability of 57.14%, and my P&L is 6% for the month. And it's just a great way to visualize your trading and your trading history. So make sure to check them out. The link will be in the description below. Let's have a look at price of here. So let's look at price action here. So let's say we got this market structure going down like that, clear indication that we are selling, right? And over here we have an indication that price is moving down. Now when we get this move here, we get this push up, we get a possible breaker structure. So this here could be said, oh, breaker structure, right? Are we looking for buys? And so Euro USD at this point is telling us we could potentially have a breaker structure and move up for buys. But on GBP USD we can see there's no breaker structure at this point, and because there's no breaker structure at this point, we understand that sells are still intact, because usually we'll need both pairs to give us an indication that we're going to move either up or down, and in this case we only get an indication from Euro USD. So if we're looking for sells on GBP USD and we have a potential sell opportunity on Euro USD, which is given by, you know, this area here, so looking for price to tap into this area, then we can see now this looks primed for a sell, this looks primed for some sort of sell as well. And so the sell was the trade we should take, and the buy is the trade we shouldn't be looking to take. And essentially that's a really good example on the daily time frame. So this is more of like a higher time frame daily bias, but we can also see this on a lower time frame as well. Here is a really good example on the 5-minute time frame. So as we can see, price is in this, Asian range. There's the London session and there's the New York session. Sorry, Asian session, London session, New York session, and we got the same thing over here. Now what I want to bring your attention to is this swing high over here on GBP USD and the swing high on Euro USD over here. So notice how on GBP USD that swing high has been taken, and a lot of people would say that's a breaker structure, but on Euro USD it hasn't been taken. So we know that this is a fake breaker structure, and so instead it is a liquidity grab. And over here, because we haven't taken that, we can understand that sells are intact here, and even for this pair we know that sells are intact here as well. So actually what we could do is we can either take sells from Euro USD, depending on what pair you want to take the trade on obviously, or we can actually say, alright, so if GBP USD is faking me out, Euro USD hasn't broken structure but is approaching a sell zone. So if I just mark this out over here, sorry, not a sell zone, a supply zone, then we know that, okay, this is also a supply zone, and we can look for some sort of reaction from here and then take a trade. So maybe you wait for this reaction here, we count that as a breaker structure, and then we enter on this trade over there, or we just enter off of Euro USD because it looks a lot better and take the trade down. And so there you go, there's another example of how we can use this divergence in our trading to ensure that we understand that it's either a breaker structure or liquidity grab, and make sure we don't get caught out by a liquidity grab thinking it's a breaker structure. And that's it for today's video. So you'll notice that you get to see me more face to face now, because that's the way content is going to go on this channel now. I want to bring you better content, better quality content, and we will just continue to grow. So thanks for being a part of the Simulation FX community. Drop a like on this video, subscribe if you haven't already, and I'll see you in the next video.